Welcome. In this video, will Zbcn coin make a comeback to the upside? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. When examining the chart, it is clearly observed that there is a highly significant support level just below the current price. This support level is more than just a horizontal line from a technical perspective. It is a zone where, in the past, the price has responded strongly to the upside, indicating that buyers stepped in aggressively. Especially in recent price action, the sharp upward reaction upon reaching this level clearly demonstrates how critical this threshold is for investors. In this context, the price approaching this support zone is considered a buying opportunity by many investors. Support levels are generally areas where downward price movements are halted and often reversed. Preserving these levels is crucial for maintaining the overall market structure and continuing the upward trend. Looking at the current price action, it is evident that the price is very close to this critical support level. In fact, during the previous decline, the price reversed precisely from this level and initiated a strong upward move, which proves how solid and strong of a base this area represents. Such historical reaction points create a safe haven effect in investor psychology, prompting similar buying responses when the price revisits these levels. Therefore, the probability of the price holding this support and bouncing back upward is quite high. The importance of support levels in technical analysis doesn't stem only from past price behavior. These zones are also known as areas where supply and demand rebalance and where investor decision-making accelerates. As the price approaches this region, an increase in buy orders is often observed. This is because many investors see the level as a bottom and believe the potential reward outweighs the risk. Naturally, this creates upward pressure on the market, causing the price to bounce back. This could be the case now as well, since the price is once again approaching this strong support zone, and it's very likely that investors will defend this area again. Additionally, the concept known in technical analysis as support resistance flip becomes important here. When a support level holds over time and the price repeatedly bounces off of it, the level creates a magnetic effect, with each touch triggering increasingly strong buying reactions. In the current situation, this support zone has already worked effectively in the past and pushed the price upward, making it a technically reliable area. This reliability increases investor confidence in the level and encourages more decisive buying activity. Holding this level is also critical for maintaining the current positive market structure. Support levels can be seen as the last line of defense in the market. Maintaining this line supports the continuation of positive sentiment. A bounce from this level will help restore confidence for both short-term traders and medium to long-term holders. For investors who rely on technical analysis, such strong support zones form a key part of their strategy. Therefore, with a renewed bounce from this support level, an increase in buy orders and a quickening upward move can be expected. This support zone may also represent the base of a past horizontal consolidation phase. When prices break out upward from such consolidation zones and return to them, a retest process occurs. A successful retest, meaning the price rises again from that zone, is considered a strong confirmation signal from a technical standpoint. But we can't base our analysis on support alone. Let's take a look at other metrics as well. Stay tuned. When looking more closely at the chart, it becomes apparent that the most recent candlestick has a highly notable and promising structure. Especially when compared to the previous red, downward pressured candlestick, the current green candlestick nearly matches in size and volume, which is considered a significant signal in technical analysis. In markets, such counteracting candles, where a green candle closes with a similar volume and length to a preceding red one, are generally seen as strong reversal signals. Candlesticks like these particularly indicate a shift in market psychology and a weakening of selling pressure. The previous red candle may have suggested some degree of selling pressure in the market. However, the equally sized green candle that followed shows that this pressure was strongly countered by buyers and that the market has started to regain upward momentum. This pattern is often categorized under bullish reversal candles in technical analysis. These candles are highly valuable for investors, as they typically suggest that the price is nearing a bottom and that an upward move is likely to begin from these levels. The structure of the latest green candle is promising not only in terms of color and size, but also in terms of its closing level. If this candle closed near the top of its body, it indicates that buyers maintained control throughout the session and pushed the price strongly upward. In intraday trading, such closes strengthen the expectation that upward momentum may continue. Furthermore, when this kind of green candle appears after testing a previously confirmed or important support level, it supports the notion that the reversal may be more powerful and lasting from a technical standpoint. The area where the green candle formed can be not only a technical turning point, but also a psychological reference zone for investors. These candles are often remembered as the point of reversal, and if the price returns to this area in the future, the likelihood of similar buying reactions increases. This provides a positive foundation for price action. Additionally, large investors and algorithms are highly responsive to such strong reversal candles, helping to create broader market synergy and contributing to a more sustained upward move. The volume associated with this last green candle should also be taken into account. If the candle formed with high trading volume, it indicates that the reversal is not merely a short-term reaction, but rather that it is backed by a strong base of buyers. Green reversal candles supported by volume generally offer more reliable signals that the price has shifted direction, while volumeless increases carry the risk of being temporary. Strong green candles with solid volume can signal sustainable, high-continuity movements. From an investor psychology standpoint, such reversal candles have highly significant effects. Many investors become more willing to buy when they see these kinds of formations, especially when these types of green candles occur near support zones or in areas where trend changes are likely. They are perceived as opportunities. This makes the upward reaction in price faster and more powerful. Investors who previously sold may look to re-enter, while those on the sidelines may jump in to avoid missing the move. This collective activity boosts the price's upward potential. Finally, the time frame in which the candle formed is also important. Reversal candles that appear on daily or weekly time frames tend to attract the attention of larger investor groups and are considered the beginning of more meaningful and lasting moves. The vortex indicator is one of the most effective indicators that allows us to analyze the direction and strength of the trend in the markets. This indicator is used to detect the directional momentum behind price movements and helps us understand whether the trend is up or down. Looking carefully at the charts at the moment, it is clear to see that there are developments that have a positive outlook and are giving investors hope. In particular, it can be seen that the line shown in blue has started to move upwards. If this line moves upwards and settles above the red line, this is usually considered a harbinger of a strong uptrend. Such a move signals that buyers are now becoming more active in the market and are starting to put positive pressure on the price. When such a scenario occurs, traders usually interpret it as a strong signal and tend to increase their buy positions. An upward move of the blue line means that optimism is growing in the market, confidence is rebuilding, and prices are entering an upward momentum. This reinforces positive expectations, especially for traders practicing technical analysis. Vortex shows us trends. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.